Wait and see. You know, when you can't predict the future, that can be a good strategy. But wait and see isn't always a good strategy when it comes to your retirement. In these uncertain times, the decisions you make today regarding your savings and investments can have a huge impact on your retirement. Phillip, Statler, and the team at Statler Financial have seen the market at its highs, its lows, and everywhere in between. They know how emotional it can be for you right now. So here's what they're doing. They're clearing their schedule to talk with you on the phone or on a video call to listen to what concerns you have and then offer help. The number to call is 863-285-3815. They are local and independent advisors who can help guide you through this. Call Phillip Statler and the Statler Financial team now. 863-285-3815 and schedule your time for a phone or a video meeting with the team. Call 863-285-3815. That's 863-285-3815. Investment advisory services offered through Statler Financial Services, Inc. Investing involves risk, including the potential loss of principal.
Hoping it doesn't turn into a cruel summer. At least the hurricane forecast says it's going to be a busy one. We'll cross our fingers they're wrong this time, right? We're at 8:40 now. It's 20 before 9. Time to check in and find out what the markets are doing to your retirement funds. That means we go down to the experts. Phillip Statler from Statler Financial Services in downtown Sebring is here. Phillip, good morning. How's your Friday starting out?
Hey, good morning, David. Starting out great today, and it was nice to actually finish up in some green ink yesterday after the first part of this week was definitely a little volatile.
Yeah, that's true. You know, I was kind of ruminating in the process. We've kind of developed a habit of having a mini correction pattern of 5% being kind of the number that some of the computer trading programs seem to like. It looks like that might have made a difference because one of our indexes was off 5%. And, well, hot diggity, we bounced back. Dow was up by 444 points yesterday. S&P went up by over 49, and the NASDAQ gained 93 points yesterday. All of those figures over 0.75%, and the Dow was up over 1.25% yesterday. It's almost like happy days are here again for one day anyway.
Well, yeah, and the question is, can we follow through? And with some of the economic news that came out this morning, I'm just not sure, Dave. We saw a pair down of the indexes when some of the numbers started to hit the newswire.
Yeah, that's true. Let's go through some of the numbers and tell folks why. The one that's probably driving things down is the import prices report. We had 0.7% increase, less fuel on the process on import prices. But what that really means is across the last year on our imported junk we buy from overseas, 10.6% inflation in import prices, and I can't think of too terribly much that we don't import something from around this country.
Well, that's true, and that makes it the highest increase in over 10 years. So I think that's kind of significant, and it plays into what you and I have been talking about probably the last week and a half, and that's inflation.
Yeah, that when you start getting into double-digit inflation numbers, even in a sector alone like import prices, I start thinking Carter-esque numbers. Would that be a fair description?
Yeah, I'm afraid so. And that would not bode well for us this year if those kind of numbers started to really kick in.
Absolutely. And, of course, then we got the fuel issue down the line. One of the headline news items had like 80% of the gas stations in Washington, D.C., where they do depend on the pipeline. And I always say we don't down here. It's just panic buying. But up in Washington, 80% of the gas stations are out of gas. Well, I sure am glad they got a mass transit system that's worth thinking about up there. I sure wouldn't want to be driving a car in Washington right now.
No, definitely not. That's, that was going to make a little chaos up there, won't it?
Oh, Lord. Well, one good thing at the very least, I bet my commute wouldn't be an hour and a half on the Beltway like it used to be. There aren't as many cars on the road right now. When I lived up there, my commute was an hour and a half each way, and it was one of those big city things that folks up there are used to, but I had absolutely no interest in living with. Retail sales reports came in as well. Again, a disappointment, and that's kind of a surprise with all the stimulus payments and tax refunds. We were expecting a full 1% increase in retail sales, ended up flat but even, and, well, it wasn't negative, but at least it wasn't anywhere close to what we were expecting, was it?
No, it really wasn't. And so, coming off of the number we had the month prior, where it was up almost 10%, You know, I would have liked to have seen at least some positive ink there. I guess nothing gained, nothing venture is better than losing ground, but still, you would hate to see it. You'd like to see it go up.
Yeah, and you want to lose some ground. How about once you get rid of automotives and gas? We actually fell in retail sales by 0.8% last month. And that, again, was completely the opposite direction and a big miss from what the market was expecting. So we're kind of starting the day out on a stinking thinking note, aren't we?
Well, at least on the macro side, definitely so. You know, it just continues to be some inflationary news, but it's not. You know, I'm looking at the futures; they continue to kind of bounce back.
No, that's good to hear. Sometimes it's interesting watching the markets when you get these things. The futures markets kind of hiccup downward and really paired a lot of gains in the first couple of minutes after these reports came out. And then kind of the futures traders said, oh, maybe it's not all that bad, and kind of swung back, didn't they?
That's right. So, hey, let's, I didn't talk about this before we went on there, but I got a couple tidbits of good news.
Please.
So wood prices, right? Because wood prices have just been going crazy. Wood prices in the last 3 days have dropped almost 14%. But 3 days ago, they hit their all-time high of like $1,670. So at least we're seeing them start to fall off now. And then, you know, we talked a little bit about kidding around about Bitcoin yesterday, and I ran some numbers on it. You know, it's down 20% from its high of 63,000.
Which kind of explains why Tesla stopped taking it.
Yeah, exactly. They want the upside, but not the downside.
Which once again kind of gets to the point. If you're going to invest in Bitcoin, people, use it with your frittering money. Don't risk your retirement on it, right?
Absolutely. Absolutely the truth.
Earnings season continues, and you got some household names that put out their quarterly reports this morning, didn't you?
Yes, sir. We sure do. Let's start off with Walt Disney World. Disney reported they had better than expected profits for the first quarter. Their revenue did come in a little bit short of expectations, though, and they had one big miss, and they missed on their Disney Plus streaming service. Did not grow as fast as everybody thought they should. They fell short of that prediction, and they're getting punished for it today. They're down 4.5% this morning.
Boy, that gives you a pretty good indication of how important online junk is these days. Company owns just about everything that moves. TV networks, three cable networks, a couple of the great big amusement parks, a cruise line, you name it, and a crummy little streaming service that was expected to be a big stuff. It fails, and they lose 4% in pre-market trading.
Yeah, it's, you know, but you look at Netflix came out earlier in the week, and it was kind of the same thing for them. You know, they missed on gaining market share, and that's the big deal.
Well, yeah, but Netflix makes all their money off of streaming stuff. For Disney, it's basically, it's a blemish on their balance sheet by comparison.
Yeah, but I think they don't want it to be a blemish anymore. That's the problem.
Evidently not.
Yeah.
It can really screw up the stock price big time. That surprises me.
So the other one we have is DoorDash. They really became popular during the pandemic. You could order your food delivered to you. They came in above analyst expectations on both revenue and earnings. They did come out with saying that they'll continue to do well, even though the pandemic may be, you know, kind of moving away a little bit. But they're up like 7.5% this morning, Dave.
Cool. Somebody thinks they've got some legs now that are going to continue after the crisis is over. That's good.
Yeah, it is good. And then we had Airbnb, a popular website to go on to find out where you want to travel to next. They posted their first quarter loss, but it also reported better than expected revenue. They said that looking ahead, they've had a 52% jump in gross bookings coming up this summer. So that's been good for them. Obviously, they're still looking at earnings. They're down a little bit, down almost 1% this morning.
I got to believe that's one of the companies I would hope to see good guidance out of, wouldn't you?
I would hope so, with everything going crazy like it is now and people getting back out, and, you know, the CDC coming out with some of their new stuff yesterday. I would hope so.
Hey,
we talked about Bitcoin, digital currency. Well, Coinbase, remember they had their initial public offering here not too long ago. They reported a record profit during the first quarter. They are a cryptocurrency exchange, and so they're trading up about 3.75%. And then I've got a big loser for you, Dave.
All right.
We've not seen this kind of loss in a while on stock price. It's a company called Poly, which didn't ring a bell for me, but when I read into the report, it is the Plantronics company. They changed their name. And
Plantronics, yeah, they made all the little Bluetooth widgets and whatnot for so many years. I haven't even seen them on the store shelves that much.
Oh, they're still out there. You need a cell phone earpiece. They've got them out there for you. However, they're the audio video maker. They had weaker than expected outlook for the coming months, the coming quarter, even though they had better than expected profit and revenue from the last quarter. So this is one of those deals. Looking ahead is more important than looking behind. They also said they're going to have supply chain issues with chips, and they are trading down. Where'd it go? Oh, here it is. Down 20.3%.
Holy crud.
Yeah, quite the loss.
Somebody's looking for a window to jump out of in the executive suite at Plantronics right
Man,
now.
if you have options tied to that price, you're not happy.
Yeah, unless it was a sell option, in which case you're probably okay. Up yesterday on the markets, didn't have any really good news to start out with this morning on the macro front. 45 minutes before we start trading, Phillip, where are we going this morning?
Dave, we are managing to stay in the green pretty much across the board. The Dow 30 is up a little over a third of a percent, $125. The S&P 500 is up a little over 0.5% at $23, and the Nasdaq's up almost 0.9%. A small cap, the Russell 2000's up almost 0.2%. So everything's looking kind of nice on that front. If we go to the commodity side, we're seeing some rebounding there also. Silver's up almost 1%. Gold's up a little over 0.6%. And then crude oil, not the way we wanted to go. It's up 0.75% this morning to $64.31 a barrel.
But the good news is it's at least close to where it was yesterday morning at this time, because we were under 65 then as well.
Yes, sir.
Little bit of an improvement. Asian Rim markets responded to us with a solid gain at the close this morning about 6 a.m. Europe is up, but up fractionally midway through their day so far. So I got green ink pretty much across the board worldwide as well. Getting advice counts for a lot when it comes to planning ahead for retirement. You can play with Bitcoin with your frittering money. When it comes to retirement, a plan counts for a lot. How do I find you to get that plan going?
You're so right, Dave. And the question I have for folks today is, do you know what your risk number is with all the volatility happening out there? Is it 30? Is it 70? That's an important question with all the volatility we're seeing. And to get the answer, give us a call at 863-382-0037. Check out our website at statlerfinancial.com. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730.
All righty. I thank you so very much. You have a wonderful weekend. I know you're going to be traveling a little bit next week, so travel safely and travel well, my friend. All right?
All right, man. Have a great day.
Thank you so much. It's 105.7 Light FM and Statler Financial Services. Phillip Statler from the...
Hey, folks, again, I want to thank you for joining us today as we close out this week. Hey, remember, I will be out next week, have some meetings to attend, and so won't be online next week. But that doesn't mean you shouldn't be paying attention to the marketplace, and knowing, again, what your risk number is truly important. Hey, on the screen, you can see how to connect with us through Facebook, through website, through the radio stations. Tune in. Don't miss a single day. Take care, and I will talk to you guys soon. Bye now.